Hi, I'm Roger Conrad. I'm the editor of Canadian Edge, a newsletter focused on Canadian trusts and corporations. But I want to start out with just a general market commentary. Obviously, things have slowed down a little bit more in the U.S. economy. We're starting to see some evidence, particularly in the labor market, of rising jobless claims and so forth. So these are things that a lot of people around the country already knew, that the economy's been slowing, and in many places, while we're not technically in a recession by various definitions, that much of the country actually is in a recession. So certainly stocks are swimming upstream. There's a lot of stress tests going on. Every bear market is really based on economic stress tests, and these are rising raw material prices. Even though these have come off a little bit, we're still at very high levels compared to a year ago, and particularly years before. And the weakening economy being another stress test, and then also very tight credit conditions. Ironically, in Canada, with what we've seen with the banks and with their earnings and with some of the lending conditions there, conditions really aren't nearly as bad as in the U.S. One of the reasons being that they never really got into the same aggressive lending practices as U.S. banks did. So while there have been some write-offs, particularly from banks that have been involved more heavily in the United States, generally it's a pretty positive environment, and the credit lending environment actually seems to be stabilizing, in fact maybe even improving. We've actually seen some takeover activity pick up. What I want to talk about regarding the Canadian trusts in particular is an issue that's very close to the vest here, I think, and it very prominent in the minds of many investors when they invest in Canadian trusts, and that's the pending taxation of trusts in the year 2011. When the Conservative government came to power, it's actually the largest minority or the longest serving minority government in the country's history. When that government came to power, it promised not to tax trusts. It then went back on that promise in a famous or infamous Halloween announcement by the finance minister, Jim Flaherty, that they would begin taxing trusts pretty much as corporations beginning in 2011. Also put some restrictions on the number of shares that trusts could issue. So obviously this created somewhat of a sell-off in the group. My opinion, pretty much the worst case has been priced in for quite some time, but it has cast a pall over valuations in the group. It has tempered buying. I think that's maybe limited some of the downside in the better ones as this credit crunch and U.S. bear market has unfolded over the past year. But nonetheless, it has been a depressant on capital gains and stock prices for most of these trusts. Well, what everybody's been waiting on, I think, is what trusts are going to do when the taxation issue happens. Canada is in the middle of an election coming up. The election by law would have had to have been held by October 2009. Prime Minister Stephen Harper wants to push one now, even though it looks like he would not carry a majority, which is, of course, the holy grail in Canadian politics, because you're able to hold power for the next 5 years and you don't have to deal with the opposition parties. But anyway, he's pushing an election for various reasons, and so the attention is turned back to what might happen if they might overturn this trust tax if the Conservatives are defeated, because a couple of major parties, the Liberals as well as the Bloc Québécois, seem to, or have made statements in any case, indicating that they would favor some kind of alteration of the tax. So a lot of investors gotten very focused on this. I think that's very possible that could happen, but again, very many uncertainties, and that's never been, ever since this tax came out, it's never been our approach. We've instead tried to emphasize trusts that would do well no matter how they're taxed, and that remains our position today. Until we see some sort of alteration of the law, I think we have to assume that it's going to go through. Now, what does that really mean? Well, that means that trusts are going to have to eventually convert to corporations, or if they don't, they're going to absorb a higher tax burden. In any case, more or less the same result for cash flow. Taxes will take away from that cash flow. And the speculation has been that it would be quite severe. And that when trusts made conversions to corporations, there would be massive dividend cuts, massive loss of shareholder value. And I think the interesting thing is that that has really not happened. We've had 5 trusts now that have announced conversions or actually gone through with conversions. In each case, the share prices have dropped off a little bit after the initial announcement, but then strengthened over the course of several months. And in fact, the trusts that have been converted the longest, Trinidad Drilling and Transforce, despite economic challenges in Canada and in North America in general, both of them are well above where they were before they announced the conversion. So they went through the drop, but actually after people were able to digest what was going on, focus on the underlying business, they've actually appreciated. So removing the uncertainty of 2011 actually proved to be very critical and actually unlocked shareholder value rather than destroyed it. Well, we've actually had a trust now go through the conversion that without announcing a dividend reduction, and that is Bonterra Energy Trust. And in fact, they've increased their distribution twice this year already. Obviously, they're doing well because energy prices have done well. But the market, they did not cut they announced a conversion, they did not cut the distribution, and the share price has picked up immediately following that. So I think that's going to be more the rule going forward. I think it's something we can really look forward to as Canadian trust investors. Certainly, again, it's a rocky market, there's a lot of stress tests going on, but if we keep our eye on the ball, we look long term, and we look at how these things are likely to perform as this 2011 process is undertaken. I think we can look forward to some very nice gains. And of course, if they overturn the law completely, we're going to get a windfall very quickly. So anyway, that's all I had to say today. Thanks for tuning in. Talk to you next time.